Are you aware that the Federal Reserve is secretly printing money? And how will this affect your investment? When I started my multifamily investment, I had no clue that whatever the Fed does have a big effect on my investment. But the moment I got to understand that every announcement that the Fed makes would have an effect on my acquisition process, my capital raising, and the kind of communication I communicate to my investment, I started taking this very seriously. And that is why today I'll be discussing the quantitative easing and how it's going to affect your multifamily investment. I know some of you are wondering, what exactly is quantitative easing? What is Bibi talking about again today? So listen, relax, and enjoy, because you don't want to miss this. Watch to the end to see how this would affect your investment. Hello everyone, are you having a wonderful time? For so many weeks or so many months, it's been a roller coaster. As many of you that are listening to the news, every day I think for me, I sleep with one eye open and the other one closed, because I know when I wake up, there will be something very interesting for us to talk about. So if it's not the tariff, it will be the LA protest on immigration. If it's not LA protest on immigration, it will be Elon Musk. If it's not Elon Musk, it will be something. So I think this is our life right now. It's very difficult for us as investors to keep following up. So what are we doing? We're constantly following up with this current administration, as well as politics, as well as what is happening outside the US. Right now, we all know that the US and Iran are almost in the middle of a war. For them to be bombing themselves, is that not a war already? I think that's a war already. And you know what that is doing? It has started affecting the oil price. Like I told you guys, when things happen outside the US, those things have ripple effects on the American economy or how investors should react. So this is why we need to keep on monitoring whatever it is that is happening in the Congress, or whatever it is that is happening outside the US, any war that is going on, anything that is happening, we need to focus on it and know exactly how to mitigate it. So I hope you've been following up on it. I know some of you don't like listening to news. I have a friend that does not even like to. So many things are happening and it's going very fast. And these things would have an effect on you and me on how we invest. But if you can't, be sure that we will bring it to you. We'll open up the canker worms and we'll also give you good value or recommend ways you can mitigate those risks. There's a news out there that the government is secretly printing money. Are you shocked? No. Don't be. The government does this, but sometimes we don't know. But these things have great effect on the dollar. So it's very important for you to know how these things can affect you and what you should start doing. If the Fed is constantly printing money, we all know that the dollar's value will be reduced. And we also know that there will be a great number of inflation in the economy. So why do you think that the government will be doing it? Before I go further, I would like to introduce myself. For those of you that do not know me, my name is Bibi Ofiri. I'm a multifamily investor. On a different episode, we talk about multifamily, different types of investment, the macroeconomy, and how it affects you and I. In my last episode, I spoke about the $9.2 trillion that will be due this year. Some are due this June, and some will be due towards the ending part of this year. And I also spoke about the pressure that this administration have been putting on Fed to reduce the interest rate. But the funny thing is, inflation report just came out, and inflation ticked up by 0.1%. And you know, when inflation ticks up, the Fed will not reduce interest rate. Like I said before, the Fed has only two mandates. And what are those mandates? To ensure that they have control of inflation. And the second one is to monitor unemployment. It means that if there's unemployment, the Fed will need to do some form of regulation or bring us some tools in their toolbox to ensure that unemployment is under control. The same applies to inflation. So when there's inflation, the government uses increase in interest rate to bring it down to control. In that way, people will buy less and there will be less money in the economy. That is the concept. But we found out that this current administration have been talking to the Fed to reduce interest rates. But the Fed, up until today, has said no, that they're still monitoring the economy to see how that would play. But right now, what we are hearing is that the Federal Reserve is currently printing money quietly. We all know the implication of that. The reason why you need to know about this is because it affects interest rates, it affects inflation, and the ability for you to buy or to refinance or even to sell your property. So it is significant. When the federal government prints money, they print money digitally. And the process of doing all that is called quantitative easing. Quantitative easing is when the federal government creates money to buy bonds and to inject money into the economy. So there are benefits and consequences of using the QE, and I'm going to break them down in this video. What this thing would actually do to our investment or to interest rates, or is it going to spike inflation? What is the consequences of using this? Since the Fed chairman, Jerome, is saying that he's not going to reduce interest rates, at least not right now, based on the uncertainty in the market. Is this current administration trying to use quantitative easing to reduce interest rates temporarily? Let's find out. So my companies are saying for the last few months that has been going on. It's been done in secret. Whether that is true or not, I don't think that's the idea of this video. The idea of this video is to tell us the consequences if that is happening, what you should look out for, and what direction should you start taking. We've seen period whereby QE, which is a quantitative easing, has been used in pumping in money into the economy, and it has been periods where we've had big issues like meltdown, the COVID virus. In 2020, during COVID, it was also used, and those things were understandable because the economy was really bad and the economy needed money to be injected into it to stimulate it, and so that monies can be in the hands of people and things can keep going on. So that was currently the idea of why they were injecting money into the economy. If this current administration is currently doing that, why do you think they are doing that? If they are doing it, it will just be for a major reason, which is because of the US debt. Like I mentioned on this video as well, because of the 9.2 trillion that they need to refinance. And also, they might temporarily do this to bring down interest rate, to go through that process, to ease off on the servicing of the debt that they've taken. If that's the case, no one knows. But those things have ripple effects on all of us. After the COVID period, we saw that the federal government has been doing what they call quantitative tightening. That is, they've been reducing their balance sheet. That is, they've been selling off those bonds that they bought in order for them to pull out money from the economy, because there was a lot of money in the economy. Like 3 years ago, 4 years ago, money was everywhere. I remember when we were raising for deals. Before 1 month or 3 weeks, you've raised the entire 5 million, you've raised the entire 8 million, because people had money at their disposal. But for the last 2 years, just after the COVID, the Fed have been reducing their balance sheet by doing something called the quantitative tightening. But recently, we are hearing that there's a reverse on that. So do you think that quantitative easing is the solution for the government to use in refinancing the debt that is coming due? And do you think the benefit outweighs the consequences? We're going to analyze that, and I'm going to give you my personal opinion about that. So what's the purpose of the administration or the Fed Reserve using quantitative easing at this point in time? The purpose is for them to increase money supply in the economy, lower interest rates, and encourage lending and investment. It's like giving the economy financial Red Bull. You pump it up. That is what exactly are some of the benefits of using quantitative easing. But if the Federal Reserve is currently doing this, it comes with its own implication. So as an investor, this is how it's going to affect you. It creates artificial growth. And what does that mean? If they're using quantitative easing, it's going to create some kind of bubble for a period of time. And if you as an underwriter or someone in acquisition, you're trying to buy something, you're thinking that interest rate is low, but not knowing that it's for a short period of time, you might tend to underwrite and have wrong assumption that interest rates will continue to go down. That is the artificial bubble quantitative easing can give you if you're into acquisition. So it's important for you to understand what exactly is bringing down interest rates so that you can know how to go through your acquisition and how to do your underwriting properly. Another consequences about using the quantitative easing is once the Federal Reserve stops using quantitative easing, we go back to square one. That is, interest rates will start going up. And that creates some kind of uncertainty and creates some disruption and creates a lot of issues in the market. So do I support that in the short term? So what exactly am I saying? I'm not saying that quantitative easing should not be used at all. No, quantitative easing is one of the tools that can be used in stimulating the economy. But the problem is when it's used excessively, that's when there's an issue. Since we already know that the Fed is not willing to cut down on interest rates, do you think that is an option for the government to use in this point in time? Let's see. Using it a short time can also create a long-term issue. In my personal opinion, I believe that the short-term issuance of quantitative easing or the government pumping money into the economy should not be a standalone solution. It should be a combination of different factors, such as the fiscal policy transform. You can see what is currently going on in the Congress about the big, beautiful bill. Whether it's big, beautiful or big, ugly bill, that's not the point. The point is that bill will tend to increase the US debt to almost $3 trillion within a few years. Since we know that if that happens, our debt will go up, which is not currently good for us, using the short-term insurance might be a perfect solution, but we need to also combine it with fiscal reforms. This is where the Congress should come in and intentionally cut down spending and look for ways that we can increase revenue, grow the GDP in the country. Because if we don't grow the GDP in the country and the expenses keeps going going up, it has a big effect on our investment. So for quantitative easing to work perfectly in a short term, it would be for it not to be a standalone, for it to also be in combination with policy reforms, that is reducing the spending and increasing the revenue of the country. They also need to look for strategies to maintain investors' confidence in the US economy. Right now, with what we saw, the confidence that investors have in the US has been declining for quite a while, especially in the last few months, and that has a lot of implications. We saw that just a few weeks ago, for the first time in a long time, the Treasury bond went down, which is not common, and that shows you that investors do no longer trust the US dollar as they did previously. So if there's a combination of these three tools, like short-term quantitative easing, fiscal reforms from the Congress, and also if the government can look for strategies or ways to boost up the confidence that other investors will have in our economy, this would be a good strategy. For the Federal Reserve to just be using the quantitative easing, these are some of the effects that will have if that's the only tool in their toolbox that they're currently using. It means that there might not be any hope for us, especially those of us that are buying properties, or we're trying to exit a property, we're trying to refinance, because interest rates will keep going up because of inflation. Because so much money has been pumped into the economy, the Fed will continue increasing interest rates to control inflation. So that will not be a good strategy if that is exactly what they are doing currently. So if you think this is only going to affect the multifamily industry, no, it's going to virtually go through all the classes of assets, from multifamily to stock to bonds. It's going to be a ripple effect on investment in the US. Another thing this can do to investors is market volatility or certainty about the debt management. Recently, we saw that Moody reduced our score from A++ to A+. It means that there's a decline in the market, that they trust the US to pay its debt. So there's less confidence that US can actually pay its debt. And the ripple effect of that is, if that happens, people will tend not to keep investing in the US market or investing in the US bond. If we don't have buyers to buy up the US bond, that is, take up our debt and in exchange get security bonds for it, that's a financial crisis or economical crisis for the US. The continuous usage of the quantitative easing will create that volatility and will make people not to be confident in the US dollar or in the US market. And we actually need those monies to come in to build the GDP, the growth of this country. But the good thing for some of us is that whenever we have issues like this, you need to look deeper, because there are opportunities, and only those that are informed will take advantage of it. We all know that multifamily investment edges inflation, not just that, even recession. So for sectors that are less sensitive to interest rate gap, will actually perform well if there's an inflation. So it's not all bad. The thing is, periods like this, you need to start looking deep and taking advantage of the opportunities. We saw that the stock market went down last month. Are you aware that some people made billions when the market went down? Are you aware that some people took advantage of the opportunity at that point to buy more, or some people took advantage of the opportunity before it happened, sold off their stock? So for every issue, there's always an opportunity. But if you don't know, if you don't study the market, if you don't know anything about the macroeconomy and the ripple effect on how it can downplay on you, there will be a problem. So if you're currently keeping cash in this period, I think you'll be in for a big surprise. Looking at what is going on, the war in Iran, the war in Ukraine, so many uncertainties in the market. This is not the period for you to keep cash. It's a period for you to look ahead, take advantage of the opportunities, and ensure that your money is working for you. And that's what multifamily does. I've been taking my time to really talk about multifamily and its benefits, on how you can start investing in it. Multifamily creates long-term wealth. It's not a short-term game. So if you're looking for get rich quick, sorry, this is not the place for you. So in periods like this, where we have so much uncertainty, or when the government is secretly printing money and creating unnecessary inflation, or interest rate is just up the roof and the Fed is refusing to reduce the interest rate, do you think all these things won't affect the cash that you have? It's going to affect it. That is why I rely and really invest in multifamily, because it has the ability to reduce my risk and also give me long-term wealth. So in summary, about the quantitative easing, my conclusion will be, yes, the government is in a very tight corner and they're looking for ways they can manage the $9.2 trillion that will be due. But I believe that there are strategies, a combination of strategies can bring this under control, or they can use it to balance up the economy. I believe that the government should weigh in the risks and benefits of QE. I believe that they should not just consider just because of the $9.2 trillion that will be due and create long-term issues for this short-term problem that they intend to solve. So I believe believe that they should take a combination of a short-term issuance of QE, reforming the policies, that is intentionally cutting down expenses and looking for mediums to increase their revenue, and also look for ways to build investors' confidence in the US economy. That would be my recommendation for this current administration. But for investors, what you should be doing at this point in time should be understanding this dynamic. It's very important for you to navigate this entire uncertainties or roller coaster, whatever it is that is going on, because every day is one thing or the other. I know by the time this video is released, we would have had maybe 4 more or 5 more different crises. So right now we are currently on the Iran and the Israel war as at when I was shooting this video. So as an investor, you need to just be current, listen, and this will help you to navigate where the opportunities are, where the issues are, or where the middle points are for you to start taking that decision. So once again, my name is Bibi. I am a multifamily investor and I help people like you to start on their journey to financial freedom. If you need to know how, click on my link below in the description area for you to get more information how you can start your journey. I look forward to seeing you in my next episode.